Have you ever felt that little flutter of excitement when you think about giving your team a bonus, only for it to be immediately followed by a wave of dread about the paperwork? You know, the payroll calculations, the tax implications, the sheer administrative headache? It's a common feeling, and frankly, it's a shame, because bonuses should be a cause for celebration, not consternation. They're a powerful tool for boosting morale, recognizing hard work, and ultimately, driving your business forward. But if managing them feels like deciphering ancient hieroglyphs, you're not alone. Today, we're going to demystify the process of handling bonuses, specifically focusing on how SurePayroll can transform that daunting task into a seamless, stress-free experience. We'll explore everything from understanding different bonus types to the nitty-gritty of tax withholdings, and most importantly, how SurePayroll's intuitive platform simplifies each step. By the end of this video, you'll not only feel confident about issuing bonuses but actually look forward to it, knowing that you're recognizing your employees effectively and compliantly. Let's dive in. The first step in any bonus strategy is understanding the why and the what. Why are you giving a bonus? And what kind of bonus best suits your objective? There's a spectrum of bonus types, each with its own purpose and implications. First, we have discretionary bonuses. These are often given at year-end, or sometimes mid-year, based on overall company performance or individual merit. They're not tied to specific, predetermined metrics. Think of them as a thank you for a job well done. The beauty of discretionary bonuses is their flexibility, but their unpredictability can sometimes be a downside for employees looking for consistent incentives. Then there are non-discretionary bonuses. These are pre-agreed upon, usually tied to specific performance metrics or goals. Sales commissions, production bonuses for hitting certain output targets, or even safety bonuses for maintaining an accident-free workplace. These all fall under the non-discretionary umbrella. The advantage here is clarity and motivation. Employees know exactly what they need to do to earn that extra compensation. However, meticulous tracking of these metrics is crucial. Beyond these broad categories, we have more specialized types. Spot bonuses, for instance, are smaller, immediate rewards given for exceptional contributions or going above and beyond on a specific project. They're great for instant gratification and reinforcing positive behaviors. Referral bonuses incentivize existing employees to help you find new talent, while sign-on bonuses are used to attract top-tier candidates to your company. And let's not forget retention bonuses, often offered to key employees to encourage them to stay during critical periods, like a merger or a major project. Each of these bonus types has unique considerations when it comes to payroll and tax. And this is where SurePayroll truly shines. Let's imagine you've decided to give your entire team a discretionary year-end bonus. This is fantastic news for your employees, but potentially a headache for your payroll department. The primary concern with any bonus is how it's taxed. Bonuses are generally considered supplemental wages by the IRS, and as such, they are subject to federal income tax withholding, Social Security, Medicare, and often state and local taxes. There are two primary methods for withholding federal income tax on supplemental wages: the percentage method and the aggregate method. The percentage method, also known as the flat rate method, is often preferred for simplicity, especially for larger bonus payouts. Under this method, a flat federal income tax rate is applied to the bonus amount. As of my last update, this rate is 22% for supplemental wages up to $1 million in a calendar year. For amounts exceeding $1 million, a higher rate applies. The simplicity of this method is a huge advantage, as it avoids complex calculations based on an employee's W-4. The aggregate method is a bit more involved. Here, the bonus is combined with the employee's regular wages for a pay period. The total amount is then treated as a single payment, and the appropriate income tax is withheld based on the employee's W-4 allowances and filing status. While this method might seem more accurate in terms of aligning with an employee's overall tax liability, it can lead to higher withholding in the bonus period, potentially surprising employees. SurePayroll automates these calculations for you. When you enter a bonus payment, the system will prompt you for the type of bonus and the withholding method you prefer. If you're unsure, SurePayroll's intuitive interface and support resources can guide you to the most appropriate choice for your situation. This eliminates the guesswork and the potential for costly errors that can arise from manual calculations. But it's not just federal taxes we need to consider. State and local income taxes, where applicable, also come into play. Some states have specific rules for withholding on supplemental wages, while others follow federal guidelines. Unemployment taxes, both federal, FUTA, and state, SUTA, also need to be accounted for, up to a certain wage base. SurePayroll's robust compliance engine is continuously updated with the latest federal, state, and local tax regulations, ensuring that your bonus payouts are always compliant, regardless of your location. This is a massive weight off your shoulders, freeing you from the constant vigilance required to stay on top of ever-changing tax laws. Let's walk through the actual process within SurePayroll. Imagine you want to issue a $1,000 spot bonus to an employee for outstanding performance. Log in to your SurePayroll account. The dashboard is designed for clarity and ease of use. Navigate to the payroll processing section. This is usually clearly labeled and easy to find. Select the employee you wish to pay the bonus to. You can search by name or employee ID. Enter the bonus amount. This is where you'd input the $1,000. Specify the bonus type. SurePayroll will likely have a drop-down menu with options like bonus, commission, tips, etc. Selecting bonus will trigger the correct tax treatment. Choose the withholding method. If you're opting for the flat 22% rate, SurePayroll will automatically apply that. If you prefer the aggregate method, it will combine the bonus with their regular wages for that pay period and calculate accordingly. Review the payroll summary. Before finalizing, SurePayroll provides a detailed breakdown of the gross pay, taxes withheld, and net pay for the employee. This is your chance to double-check everything. You can see the federal income tax, Social Security, Medicare, and any applicable state and local taxes clearly itemized. Approve and submit payroll. Once you're confident, simply approve, and SurePayroll handles the rest, from direct depositing the funds to filing all necessary tax forms. It's that simple. What could have taken hours of meticulous calculation and cross-referencing tax tables is condensed into a few clicks. With that said, thanks for watching, and until next time.